Overall, the result was a little bit weaker than we expected. There were a couple of little write-offs, but I mean, overall, in the scheme of things, not large. The underlying result, when you strip those out, was basically as expected. Overall, Ria's travelling really well at the moment. They've paid down a lot of debt, balance sheets in very good shape. Near-term earnings look very strong. And they look pretty cheap. If you take current earnings, they're trading on less than 10 times PE and nearly 6% fully franked dividend. But it's interesting to note that earnings per share are nearly back to 2012, 2013 levels. And that was kind of like the peak of the China boom. So I think it's worth really keeping in mind the context of this rally that we had. It's been very strong for the miners and it's been very positive for earnings. Really, that's been off the back of, we've had some synchronised global growth, but really the stimulus in China has been the key reason why. Longer term, that can't continue. If you look at how much steel China has per person in its economy, it's about 2/3 of developed world levels. So they've used up 2/3 of the runway for total steel that they have in their economy. And if you take the next decade of consumption, they'll pretty much use that up. So there's a finite runway for how much they're going to consume, and this kind of stimulus has just brought that forward. You know, with Rio Tinto yielding nearly 6% fully franked, some people are looking at this stock and saying it's an income stock. We've been here before in resources, and that was back in 2012, 2013 at the height of the boom, where people say resources are now income stocks. They're not capital growth stories. And I think the business model doesn't lend itself to that. You know, it's got finite assets, they deplete, they need to reinvest, and that reinvestment costs a lot of money. So inherently, it's very different from a utility or a pipeline or something like that, which is just a yielding kind of business. So if you buy this stock, you're really betting on future commodity prices and taking into account what's in the price now. So I think that's always going to be true. From time to time, there'll be a trend different to that, but I don't think that's sustainable, and that's not what you're betting on long term.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.